and then the low of it. That's not a zone where it's ambiguous. Like, where do you trade a supply and demand zone? Okay. That's why I'm not supply and demand. And I also cut through candles. Supply and demand would not use this level over here based on anything like that, because they say we don't cut through candles. They need a fresh zone. Everything from ICT is fresh, baby. Everything. There's nothing stale here. We always have fresh bread, and my students are always making fresh bread. They do it on their own. They don't ever run out of yeast. Just like this mentor talking to you, I don't ever run out of yeast. You're never going to run out of opportunities. It's never going to happen. There's no reason for you to rush it, because once you get it, nobody can take it from you. Nobody can say you can't do it because they don't like you. They don't like your personality, whatever. You can find these setups. Once you have the understanding, you can go into any market, any time frame, and murder it. Literally murder it. But you're trying to be too quick to assume that everything that you already know will complement what I'm teaching you. No. No, 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 no. What I'm teaching you will make the stuff you tried to be profitable with profitable. If you include the things I'm teaching, how to read price, the draw and liquidity, that's the first lesson. The first lesson I start to drive home in a student's mind is, where's the price trying to gravitate to? Where's it trying to get to? Well, initially I started with the order block, the weekly, then the daily, and the mean threshold of that weekly order block. Does your chart show this? Because you're looking at a live chart right now with me in the live stream. Did it pan out like I showed? Absolutely it did. The same direction I was looking for. Everything I was looking for in terms of the specific levels, I gave you the logic. I talked about it beforehand. It's here now. So it wasn't done with a 1 minute chart. It wasn't traded or worked with in a second chart, sub 1 minute time frame. It wasn't even an hourly chart. I used weekly charts. It works, folks. You can make this work for you. Where you are at in your life, school, business, job, your relationship causes constraints that you can't do the intraday charts. I get it. But don't think that it's a one-trick pony that only works on a 1 minute chart. There's a lot of 1 minute setups that allow me to teach you that there's no short supply of setups. You will always find setups. But there's going to be times when the market will be, well, look at all this mess in here. I don't like these types of periods. I don't like that. And that's why you see me do what? I took time away. I did road trips. Now looking at the price action in hindsight, now it makes perfect sense to you why I was doing what I was doing, right? But at the time you're thinking, oh, they changed the algorithm. ICT's on the run. No, I'm relaxing because I know that all I need to do is see a shift in market structure. What was that? See this high? It breaks it. What does it leave? Fair value gap. See that? Now, we're going to talk about gaps today. My personal private students and the public students, all of you, probably majority of you here, are constantly asking this question. Can you talk about the breakaway gaps? Can you talk about when fair value gaps should not fill? I'm going to teach you about that today. Okay. So if we're looking for a draw on liquidity, and we are in this vicinity right here, the first thing we want to draw our attention to was this imbalance here, that shaded area. Now, when I'm showing it to you on a daily chart, and that's the time frame this is being shown in right now for the dollar index, I promise you all of this works in ES. It works in Forex, because I'm starting this whole presentation. This is going to be Forex in the beginning, and then I'll end the discussion in today's live stream on the index futures. But everything I'm teaching you here is applicable to Forex and futures and commodities and gold and bonds. We're going to talk about bonds today too. Okay. But all of this higher time frame gives you, in my opinion, you're welcome to disagree. You're never going to convince me otherwise, but the higher time frames is where the majority of your time should be spent, because it's so easy to get lost on these lower time frame charts, especially if you're new, because you'll think you see all kinds of stuff. The Three Stooges pattern, there isn't one, but I'm just making a joke about how everything can be applied to any time frame. If you want it to be there, you'll see it. It's like a mirage. You're thirsty. You want to get that new drink of success. And just like sometimes in a desert, you'll think you see something out there. It looks like water, and you get up on it, it's just more sand. And you don't want to fill your well with sand by chasing setups that are not there. They're phantoms. Higher time frame removes most of that. Not all of it, removes most of it. So now let's talk about, and again, before I get into any discussion, I want to take you back to the weekly chart and show you what this is again, this shaded area right here, real quickly. I like to be complete, folks. I don't like to leave anything up for debate. That little section between this candle here, that low, and this candle's high. And the reason why I'm drawing attention to that is, let me take this away just for a second. Can you see how this candle dropped, stopped? The next candle here opened, traded down all the way here, and came back and stopped. The next week it opened, traded up a little bit, but didn't come back all the way to that candle's low. See that? So there's a distinct gap, separation between those two key levels there. And then we expand lower, and we open, trade up, leaving this little portion of price action between this candle's low and this candle's high remained open. Okay, so it's only dropped down. So that's sell side delivery. What is it? Inefficient. Buy side. So it's a SIBI. Sell side inefficiency, buy side. Oh, I said that wrong. Sell side imbalance, buy side inefficiency, SIBI. That little distinct gap there stands out. If we were standing over here on the right of all this price action, look how fortified all these back and forth movements are here. All these candles moving back between over and over again inside of this range here.
All right, good morning, folks. Welcome back to another video. Looking for sell side here on ES. Have the live streaming. I do want to be part of it, but right now it's work time, so I got to get it in real quick. But I'll still be listening in. I like the way we're expecting this fair value gap, but spending too much time, you never really want to see so many candles trading through it. Now I'm allowing price to perhaps take out this high, especially if you switch to regular trading hours. So there's a gap in here. I wouldn't mind seeing price trade to the mean threshold of this gap and then sink lower. But I'm not going to open my stop though. This is a paper trade. It's a paper trade for a reason. But let's see if we get that. It'll be actually very interesting if we do get that, because we also have a small fair value gap up here. And I'd like to see that 3 drive pattern a little bit. We have a high here, didn't take out any lows, drove higher again. That's the second one. If we get a third push up here, then we have a 3 drives pattern, and then we could see that lower price that I really want to see. So that's what we're looking at currently. I'll put Michael back on the audio.
You want to see it go to it, through it, and come back down and treat it as support. That's an inversion fair value gap. Don't take my word for it here. Go back and look at the other reviews that I've showed here. Go and look at the tweets. Listen to the Twitter spaces. Sometimes I cuss there. Just be mindful that it's live. Here I tend to do a better job because I'm looking at candlesticks, but if I don't have a candlestick chart in front of me on Twitter spaces, I generally use blue collar language, and my imbalances inside me just make me not the best mentor for that. But that little gap here is this segment. When we go down to the lower time frame daily chart, now you know what you're looking at. Right there. See, it doesn't look like a gap here because look what it's done. It passes back and forth, okay? Do not assume, this is really important, do not assume that a inefficiency, whether it be a fair value gap that's a buy side unbalanced sell side inefficiency or a sell side unbalanced buy side inefficiency. Either or. Don't assume if it's on the daily chart that if you see on, or a weekly chart rather, don't think that we see these back and forth moves on the daily chart that now makes this a balanced price range. It doesn't, because on the weekly time frame it's inefficient still. The higher time frames have to have bodies hit the floor. That means it's got to cover that gap. Even though these individual daily candles have worked inside that range, that's not, you're seeing the formation of that weekly fair value gap with all of this in here on the daily chart. It's something you have to study on your own, working a higher time frame down to lower time frame. The higher time frames are parent. The lower time frames are subordinate. They're only going to behave in a manner that allows certain price delivery within the context and constructs of a higher time frame imbalance or liquidity pool. That's it. That's the liquidity continuum. What you're looking for. Market has to go up.
Okay, so we do have buy side taken here. Now, this is very interesting because we don't have that in Q. That places us in a position where this is an SMT divergence. It's going to be very telling how this candle actually closes. If it closes above and then the next one is bullish also, leaving some sort of fair value gap, okay, good. So this will be a run on stops before heading lower. But now I need to see a fair value gap though. And this candle could cause some trouble as a bullish order block. I'll show you how I go through my mental Rolodex. So does it respect this and trade higher? Also, this old fair value gap, it could now even be considered an inversion fair value gap. Now, does that act as support to send price higher? Another thing we have to consider. So the only way for me to get sell side, this candle needs to be violent and then take out this swing, short-term swing low, preferably this one, to actually really show me that price actually does want to head lower. The SMT divergence isn't enough. This fair value gap has to be obliterated and this order block. Seems like we're about to get that. Let's see. Get NQ real quick. Not in a rush to go anywhere. We're still inside this 15-minute fair value gap, I believe. So if we take this off, 15 minutes, so we're inside this. And the high of this candle is the open on this bearish order block also. See, have this fair value gap and this candle right here. Sign of defense. If it doesn't respect this, then I'm not gonna get low prices like I'd like to have. Dismisses this bearish order block. Doo-doo, bad news. Bad news. Put Michael back on.
Hate me or trolls and people can't keep up with me, they'll insist that it's cherry picked. But they don't know the logic. And if they would just simply like listen to me now, I'm telling you what I'm doing. So that way you can go back and look at the things I've shared and say, oh, yeah, there it is. There it is. Right. I'm not pulling things out of thin air. I'm pulling it from 30 years of experience. I authored these things. So I'm sharing that language so that way you can learn how to do it. So this fair value gap was the initial draw on liquidity. When we shifted above this high here, That candle right there that runs above that short term high, that's a shift in market structure. Now, market is in a buy program. A buy program is now when you start looking for premium arrays. Where do you look for those premium arrays? Well, what is the dealing range? That is this high to that low. We're only interested in premium. So we don't look at this short term high as a turtle soup run above and go lower. We don't look at this high here as a run above that and turtle soup and go short lower. No, we're looking for the first equilibrium or higher PD array. We started on the higher time frame. You want to do a top down analysis because large institutions, big funds are going to be using higher time frame charts. So we're going to cannibalize their long term models. Their long term model through here was bearish. So we're looking inside the scope of this high to that low right there. Midpoint is here. That shaded area in orange, I'm assuming it's a hue of orange, but that shaded area, that's the weekly inversion fair value gap. That's the first level of my interest. Okay. So this specific weekly point of interest, I gave you the context as to what I want to see with it. It wants to go higher, great. I need to see something specific. I want to see it trade to it and through it. We've seen it close right there. If a market closes above a fair value gap that you think should be bearish, that's not a good shorting opportunity. Many times it's communicating to you that it will become an inversion fair value gap. Oh, there you go. The penny just dropped. I just gave you something again. But if you're not listening, okay, if you're not trying to filter out the buy and sell signals that you think I'm teaching you in Morse code. I'm teaching you specifics in detail. This is the point. You want to be trading with precision. You want to be able to read the charts without me and nobody else helping you and be independently wealthy. All these things have to have a lot of understanding and logic. So that way you can trust it. It's not changing and morphing all the time. The rules aren't changing. The goalpost is not being moved. You know that this logic is sound. You've seen it many times before and you can trust it. So that way when you go forward and you're in forward testing and then before a compounding challenge or if you're trading with your own account, you'll trust it. You won't be nervous. It's the same type of thing like when you go to work. You know the different routes that you can take to get to work. Is the map changing? Sometimes there's a detour that's required. There's construction. Well, guess what? Sometimes the market will do a little hiccup and you didn't see a specific time frame do something and it might stop you out. Okay. Recalibrate like a GPS. What does it do? It reroutes you. As long as this objective of the weekly order block, which was the draw on liquidity, this was the multiplier, the inversion fair value gap. So I wanted to see, does it get to it and through it? Yes. Does it treat it as support in the lower time frames? It does. And then trades up to that.
All right, folks. Quite ironic. We did have an inversion fair value gap here with this order block we talked about. And the point of if a candle closes above a fair value gap that we think should be respected, then it'll typically, it's like an indication of that fair value gap might be used as an inversion fair value gap. First time I've heard about that, and this candle, it's the first one that closed above the fair value gap. And lo and behold, 3, 4 candles later, it really turned into an inversion fair value gap. Interesting observation for today. We didn't get sell side, but at the same time, I have all my live accounts loaded, ready to go. I did not push the button, didn't have enough. But typically, that's a typical day for me. Sometimes I'll take the loss, but on a day like this, though, typically you can see it coming once you start weighing your options and looking at price. So no entries for me today. especially as it gets closer to 10:15. Uh, Not a big fan of pushing the button after that. So, with all that being said, folks, I certainly hope you found this video insightful, seeing me not push the button, but actually getting to see how at least how I go through my thinking process when it comes to deciding when to execute or not. It's one of those things. It's boring, sure, but that's the mental Rolodex. Weighing all these different PD arrays to determine whether or not the sell side is likely. I thought it was, but price told me something completely different. There's going to be days where you'll miss some of the clues that price is throwing at you. But like today, I didn't really miss much since I saw the inversion fair value gap, spending too much time around it, the order block. You can tell that at some point. Once you look at price enough, you can tell. And today is one of those days. Perhaps during 12 to 1 p.m., we might still get this sell side. But either way, I don't trade around those time periods. I have other things to take care of, but it was a good day, a good study, good insights, and another day in the books. Just getting better one step at a time, like Zeno says. Well being is realized by small steps, but truly, it is no small thing. This is the boring work. This is the part nobody wants to do, but trust me, I'm willing to do it. Eye on the prize, baby. Eye on the prize. All right, folks. Have a wonderful rest of your day and rest of your week. See you guys tomorrow.